morning, everybody. Welcome back to another webinar with the Everyday Growth Advisors. I hope you guys are having a great morning. Welcome into the webinar. I hope this one will help you out greatly. Today's webinar is a special webinar, and I hope you guys enjoy it. This is something that I think everybody should know. And, you know, it's actually a very big concept from the mentorship course, which I'm going to kind of release into the wild today and hope that it helps you guys out. Wave patterns, very, very important stuff. Things that you absolutely need to know when you are dealing with financial markets or anything which is a security, financial security, anything that's algorithmically traded, okay? And so I want to actually just jump straight into it today. There's not really a market update except for the fact that I see us making some higher highs here, but which is a good sign, right? So far so good. As long as we can stay above this moving average here, we should be okay to make an extension to the upside here with S&P 500. With the Dow Jones, we already consolidating above, which is a good sign. And with the NASDAQ, we are approaching that level very soon. So it's looking okay so far, but don't get all your eggs in one basket just yet. No bullish sign of reversal just yet. And so I want to make it clear how you can wait for a confirmation. And then on Thursday, we're going to talk about confirmations themselves. So today I want to go and take a page out of the playbook, which is going to go by teaching you how to look for wave patterns, okay? And wave patterns are extremely important concepts of the financial markets, so we will jump right into them, okay? So I'm going to kind of use this as the whiteboard here. So we have in total, oops, let me get it thicker, a total of 3 types of wave patterns. Okay, and let me just make sure that my computer is on the best performing possible mode. That's why. I always end up saving a bunch of energy and then having least performance, and so I need to sap up as much as possible here. Okay, so you have 3 primary movements in the market, right? 3. The first one is a uptrend where stocks make a series of waves like so, okay? And then they go into a consolidation phase. And then they go into a distribution phase. Okay? So take it as though we have about, and I'm gonna draw the waves out in different colors here. So this is wave 1. And we'll use orange for this one. Wave 2. Okay. And then we'll use green for this one. Wave 3. Okay. And then you generally have this consolidation phase, which is formed also usually of about 3 waves. Okay. So now you can see when something makes a higher high and a higher low consecutively for 2 waves, this is when something forms a uptrend, okay? And when something makes consecutively lower highs and lower lows, you can see this forms a downtrend, okay? So this is your uptrend, this is your sideways channel, and this is your downtrend. Now, the important thing to note here is that one level's support becomes another level's resistance when there is a change in trend, okay? So for example, this old resistance here becomes a new support on a uptrend, okay? And on a downtrend, it now becomes the new resistance becomes the support, okay? So this over here, this is not drawn to scale, that's why it's looking a little weird, but you can see, okay, this point here, which was now a wave down, after a pullback becomes a new point for a resistance, okay? This was once a support and then now it becomes a resistance. All right, so you need to understand that when we are confirming a pattern, we need two waves, okay? And the two waves have to consider of higher highs, higher lows for a uptrend, and for a downtrend, we want lower highs and lower lows. Okay, so many people always ask me, they say, so how do we know when or how or where is the wave or this or that? Okay, well, the thing is that majority of the time, it's easy to tell because you're acting after the wave has completed. Okay, so let me show you what I mean by this on SPY, right? For example, we're looking at it here, right? Or NASDAQ or whatever, okay? And typically, I like to use a bigger time frame to capture the price action of the wave, okay? So on the, for a wave, generally speaking, if you use a 1 hour time frame, you can really see the waves nicely. So for this specific example, you can see, okay, we're in a downtrend. That's the first wave, right? This was a second wave, okay? And then we had a third wave, right? Okay, so this was wave number 1. This was wave number 2, okay? Remember, this was your resistance, and then this became your support, right? And then after the second wave, what happens? This resistance is now a new support. You see that? This is resistance and this is support, right? So you see this point here becomes the support, right? Okay. And then over here, right, we go down for another wave here, right? And obviously here, because we are starting to see a reversal, so what happens is the support now changes, right? Now the support's like up here, so we're making kind of a higher, we're trying to push up here, okay? So we're no longer making such a valid move here, all right? And then what happens? We go into a consolidation phase, right? Then we're in first wave, second wave, third wave, right? Okay, wave 1, wave 2, wave 3, right? Can you see that? Pretty simple to see that, right? After it's happened. Now, what are you seeing? You're seeing the first wave, right? This is the wave 1. It's not yet completed. It's not yet completed. So what do you see now? You need to see one more wave, right? For you to get into this trend. So you need to enter on the second wave. Okay? You enter on the second wave. Always enter on wave number 2, which is here. Okay? Why? Because this is after you get confirmation and you can ride that wave up. You don't know how many waves it's going to continue going up. In a bull market, that can be for a long time, okay? This is a short-term pattern that I'm telling you about where there are 3 wave patterns. But in reality, there could be more than 3 wave patterns, okay? There could be more. So you always enter on the second wave. The second wave is where you enter. Because this is where you have confirmation. Okay? Now, if you do this, you will realize that you will never FOMO into things. Because you'll just learn that the market is a big cog and it's actually a human. The market will never go up in a straight line. It will always have breathe in, breathe out, breathe in, breathe out, breathe in, breathe out, right? Okay? And the same thing goes for breathe in, breathe out, breathe in, breathe out, and then breathe in, breathe out, and then breathe in, breathe out, right? It's always like that, okay? So when you're dealing with the financial market, you got to always remember the first wave is always the one that you avoid because you don't have a confirmation. The second wave, when you see it going up, rallying, this is where amateurs make a mistake and they buy in at the top after the first wave, okay? When you should be buying on the dip of the first wave, the second wave, sorry. The second wave, this is where you enter. Okay, this is your entry point here. And then you ride this up to the third wave and beyond. Now, if it continues to make an uptrend, what you will see is that this will come down here and then stop and then go up higher, right? It'll continue making higher highs and higher lows. But what if the market does one of these? Well, then you know that the trend has reversed and this is time for you to get out. So do you get out here? No. You wait for the pullback and this is where you exit if something goes wrong. Okay? So many people panic when something goes wrong, not against their trend. But you need to realize it's much easier than it looks. Okay, I really hate to erase this right now, but I want to read the chat first before I do that. So let's see, Tesla, how do you feel about it? Are the waves 5-minute candles, 15-minute candles? It depends. It's up to you. It's up to you. We're confirming these trend patterns on which chart. Personally, I like 1-hour charts to confirm these patterns. Okay. If you're doing day trading though, I would say 10 to 15 minutes is a good time frame. That usually is a good amount of time that you will need to confirm. Now, 10 minutes is the bare minimum to confirm these waves. Okay, 10 minutes, bare minimum. So, for example, I don't know, just pick a random ticker, right? I don't know. Let's just choose one to watch this, right? Let's just say Microsoft, okay? So I'm gonna get rid of all the indicators here first. Okay. Too many things, right, going on, so that's why I want to get rid of it. So here we go. So you have your first wave down, right, up. That's wave number 1. Second wave down, up. That's wave number 2. Right? Third wave down, up. That's number 3, right? And this one made a low. It's made a low, but look, it's not. It's barely, right? So you can tell now Microsoft is starting to bottom out, right? So it could go either like this and then come down and make a higher high, okay? Or it could just come down here and make a same level low here, okay? So, do you trade this to the upside? Possibly, you could, right? On the 1-hour chart, yes. Okay. And I'm using a 10-minute time frame here just to show you the difference. But if you look on the 1-hour, you'll see a completely different thing. You see, on 1 hour, it's a bit choppy. So you don't have enough information here. Yeah, the market absolutely breathes in and out. That's the way that I look at it. And I think that's the way you should look at it. It's like a human, okay? You'll see breathing out and breathing in. And the biggest problem is majority of people, they freak out when they see something happen, okay? They freak out. They're like, oh my God, I don't know what just happened. And, you know, they take a stab at getting out at wrong times. So what are the right times and what are the wrong times? Let me try to explain that further. So for a uptrend, you'll see this, right? Usually, that's what you'll see. That's the waves, right? So your first wave and second wave, right? This is your entry point. After confirming higher high, higher low, right? You have the higher low, and now the higher low from here. Higher high from here. Okay, you enter here, right? Then what do? Now when the market moves up to your next wave and comes down, and you have this, now this is your new support, right? Remember, this was your old resistance. Now this becomes a new support. And your entry was here, right? Well, on the third or the fourth wave, as the stock moves up and makes a high here, you move your stop loss from where it was below here, right? This is where you would usually... So here's another mistake here, okay? When people enter here, okay, here is where people put their stop loss. This is where majority of people put their stop loss. And because this is the previous support, right? This is a previous support. So therefore they put their stop loss here. But they fail to realize that market makers know exactly where you put the support. Okay, they have access to all where your stop limit orders are. Okay, so what happens? The stock price comes down, touches your stop loss, and then moves back up. This is a typical thing for a market maker to do. Okay, so following the waves is one thing, but setting your stop loss is another, right? So you should always move your stop loss or set your initial stop loss lower than where you were anticipating to put all of your stop losses. Okay, now that would become your stop loss 1. So this blue one is the wrong level to put it at. Because if you do that, almost with the 80% certainty, a market maker will come down, touch, and go back up. It's almost an 80% certainty. But if you put it down here together where nobody else is putting their stop loss and you take on a little more risk, right? Because this is more risk than this, right? What happens? You now get a higher return. Okay? So, after the stock moves up on the third wave, this is when I move my stop loss from SL1 to roughly a little below my second support zone. You don't want to move it here. Why? The same reason why you don't put it here. You move it below this point again, and this becomes SL2. Okay? Now you've locked in this amount of profit. And you continue to do this process for every $1 movement in the contract price. That's how I do it. Until the point where the market decides that, okay, it's done rallying, it comes down, and let's say you moved your stop loss up here, yada yada, and it stops you out. Okay? You're stopped out. I repeat, I never close my trades out. I let my stop loss do the work for me. Let's say this was SL3. Okay? Keep that in mind. Now for a sideways channel, obviously, the thing about this one is you're trading a breakout. You're trading a breakout pattern. It's either a breakout to the upside or a downside. Okay? Either way, there will be one direction the stock will break out. Now, do you take it on the breakout? No. What do? Breakout, one wave, two waves. Breakout, one wave, two waves. This is where your entry is. This is where your entry is. Okay? The thing is, many people get so caught up with trying to chase the wave, and they get so caught up trying to make this amount over here that they forego what's above it, which is so much more, and what's below it, which is so much more. Okay, I wish I had more space up here, but you understand what I'm saying, because this first and second wave is just a confirmation for the uptrend, and this first and second wave is just a confirmation for the downtrend. But what comes after that is usually radical movement, because humans are irrational. Okay, I hope that this helps you out a little bit. If you're here and you're enjoying this stream so far, I highly recommend you to smash the like button. I would really appreciate that. Would SE be would SE is a good example? I don't know. Let me see. Not yet. It's not making higher highs and higher lows yet, right? Look, you only have one wave completed here. You need a second wave. How will you take the trade sideways channel? I just explained that. How do you long should a second wave be? 2 minutes, 5 minutes? It doesn't. No, there's no. See, that's the thing. Majority of you guys, you have this problem. You always look at waves in terms of timing when I'm trying to tell you that you can look at the waves after they've happened. So why are you trying to think of it like it's a timed thing? At minimum, I said you need to look at a 10-minute time frame, right? A 10-minute time frame. It's a minimum that you should look at a 10-minute time frame, right? Okay. But at a maximum, you can go up to an hour, right? At a maximum, you can go up to an hour, right? And look, this is one of those cases where, for example, the market maker comes up to stop you out, right? And then continues higher. You see that? Like beyond, right? On the 1 hour chart, you can see wave up, wave down, wave up, wave down, right? Wave up, wave down, stopped, closed out a whole bunch of people here, and then boom, up. Okay, so this happens. It happens a lot, and you guys need to be aware of it. That's the reason why you don't set your stop loss here. Majority of people, where would they set their stop loss? Here. This is where they set their stop loss. But guess what? Even if you set your stop loss here and here and here, you should have set your stop loss way below, right? And so that added risk that you took on would have been the return that you get. Obviously, this is a very poor example because this is a what do you call a weird sell-off. But this is a market maker clearly stopping people out. Okay, so you have to be careful of that. Do you use these stop losses for all trades, including scalps? No, I don't. For scalps, yeah, I do. I use that technique for scalps. For swing trading, I don't set stop loss until I'm in profit. For day trading, I set stop losses. Yes, absolutely. It really depends on situation. With stop loss, what happens if the stock market is in opposite direction after hours? Then your stop loss is not useful. Yeah, it's not. Until you have a good to cancel order. And so you got to be careful. Does this technique work for bonds and futures as well? I wouldn't know. I never traded those and I don't recommend. How do you see Walmart? Let me see. So this is in a downtrend, right? Look at it on the 1 hour chart. That's a downtrend, right? So this is wave 1, wave 2, wave 3, wave 4, wave 5. Now it's starting to show, and look at this zone here is what we call a demand zone, right? This was a previous supply zone actually. Now it's become a demand zone. So this is actually a dual zone, right? This is a dual zone here. In fact, let me just go ahead and do this real quick so that you get an accurate depiction of this. So this is now both a supply and a demand zone. Okay, hopefully that makes it a little easier for you to see. Okay, cool. So now this was your old the old resistance here, and now it's become a demand zone. So this is the level at which Walmart can pivot. So how do you confirm this one? So what are you waiting for? You're gonna wait for 2 waves to appear, right? So you'll wait for 1 wave and then 2 waves. So let's say this is not considered the wave yet, right? So let's say 1 wave and then 2 waves. And that second wave is where you will enter, right? If you can confirm higher highs and higher lows. You will see the wave after it's over. If you don't see the wave, then it's not over yet. Okay, so you got to realize that. When you know to heed T's advice, but your ego says YOLO. Well, I can't really, you know, I can't really help you more if your ego's in the way. You know what I'm saying? Stop loss or stop limit set 5 cents higher. That's always your stop limit. So a stop limit order is a stop. Yeah, so I'm talking about stop limits, obviously. A stop limit order is a stop loss that converts to a stop limit. So you always want to use a stop limit so that it's a safer bet. Okay. And your limit order is the absolute lowest. So your stop order is always going to be 5 cents higher. Always 5 cents higher. than your limit order. Okay. Okay, now what else did I want to talk about here was, yeah, I mean, I think I covered majority of it. So the sideways channel we covered, downtrend obviously is the similar concept, right? Okay, so you have your first wave, and then you have your second wave, and this is where you want to enter your puts entry for a bearish position. Okay, you never want to enter in the first wave, because what can happen? It could be a fake out, right? It could be like this, and then like this, and then ooh, ooh, ooh. You know what I'm saying? So many of you end up in this situation, and I'm just telling you, wait for the confirmation for a 2-wave pattern, and then you can trade this down to capture the third wave. And if so here's the thing. People always chase this. They chase this, and then they let go of this. And usually this move is bigger. So it's like saying, you know, you save, you want to save, I don't know, $100, and then you end up spending $1,000. Why? Because you lose the 1,000. Instead of saving 100, you lose 1,000. It's like a poor man mentality. It's like, no, I want to be greedy. I want everything. So if you want to be greedy and you want everything, then you will constantly find yourselves in these situations. But if you know how the market works and the breathing patterns, then you understand, I'm just going to not be greedy. I'm going to go for this one move, okay? One move, one wave, and this will have a success rate of almost 80%. I would rather have 10 trades like this than to have one trade which will give me this entire move. Okay? This entire move. I would rather have 10 trades that give me the smaller move. Okay? Because I know the success rate is much higher. Great. Let's see here. When do you set your stop loss for leaps? I don't set stop loss for leaps. Those are long-term contracts. I don't have a stop loss on them. Thank you. I have truly learned a lot, and I'll be signing up for the next beginners course. What is the date for that again? Thank you, Ryan. I appreciate that. The next beginners course sign up is going to be on the 26th. So next week, Saturday, that's when we're signing up for beginners. Highly recommend you to note the date down and definitely put it down on your calendar. The spot for those will get snapped up very quickly. Also, yeah, I highly recommend you to, you know, set an alarm or something. Like put in your calendar for sure. Thoughts on XLE pattern? Let's have a look. This is a big downtrend, right? Big downtrend. This is a big downtrend. So on the 1 hour chart, you can clearly see the waves, right? So expect this to now start turning around. So should you take, the question here becomes, should you take this to the downside? Absolutely not. Why? Because it's already made its move, right? Now it could reverse. So what do? You wait for this patiently to reverse, start making higher highs, right? You start to wait for this to do one of these, right? And then you can enter on the second or third wave, okay, to play the rebound. Do you consider level 2? Yeah, I do sometimes, absolutely. Where I see majority of the buyers or sellers at, that's where I would avoid those levels. What percentage risk below the past support would you recommend? I always use have paper hands. So I don't go by percentage risk. What I do is I calculate the delta that I need for the contract. For example, if I have a stop loss of about, I don't know, let's just say, personally, let's say I have a entry at 143 and I want my stop loss to be at 133. Okay, I'm expecting a $10 loss on the stock. Let's say this is my tolerance. Well, then I would go figure out for that contract that I own, what's the delta value, and I would multiply it by 10 because each move represents one delta. I hope you got that. And that usually is, you know, a good way to allocate risk. It's not like the best way, but it's a good round figure, like a good amount. And you should only do that for day trades, not for swing trades. Swing trades, you got to do it differently. And I teach that during the mentorship course. What do you think of FedEx right now since their earnings are being released today? I do not know. If you're asking me how they're going to perform for earnings, I would say take a coin and flip it. You have a better chance of figuring it out that way. So the core thing here is patience. Absolutely. Yes. Patience is the reason why you fail. It's because many of you jump in without confirmations. That's the reason why you fail. For example, here on the 1 hour chart, what am I going to be waiting for, right? So now I have one wave, two waves, right? Technically, right? There's one wave here, and then there's another wave here. There's a third wave here. But the reason why I wouldn't go jump into this yet is because I want consolidation above the moving averages, okay? Once I see a bounce somewhere here, then I will be inclined to take this up to the upside, okay? Do you wait for the third wave on swings? Or other consideration for swings? Well, for swings, I wait for two waves. I don't wait for any third waves. Do you wait for, okay, thoughts on XLI pattern? Okay, this one's interesting, right? So this one's in the process of going to a wave pattern. So let's say at the 15-minute, it'll make more sense here. Okay, so here you can see a bunch of things, right? Okay, so we had the, one wave down, two waves down, three waves down, right? You can see that, one wave, two waves, three waves, right? Now, see, before this webinar, you were probably not looking at it this way, okay? Now that after I have pointed it out for you, it's going to be very simple for you to understand this, right? I don't know if you agree, but if you do agree, then tell me in the chat that it's easier for you to see this now, okay? Because let me tell you something. It's like sometimes things are staring at you in the face and it's so obvious, but you don't realize it, all right? And then all of a sudden somebody tells you this one minor way to look at things and you're like, dude, what the hell? Like, I should have been doing this all the while. But the problem is your ego refuses to let you see things the way that you want to see it or you should see it, okay? So you have to realize that from now on that your brain is setting you up for disappointment and you have to absolutely be aware of these things, okay? And honestly, if you did find this webinar helpful, I really, really wish that you would just take a second to just hit the like button so that this can reach more people. You know, I honestly don't ask for a lot. I don't ask for donations, which you could give if you wanted to. I don't ask for anything except for you to just hit the like button because I feel like I just hope that more people can see this, okay? That's all. So now you see the third wave there. Okay, then you see, oh, okay, now we go down here. Okay, now, oh, one wave, right? One wave. That's your first wave, right? Look, that's from the bottom. And now look, this is higher, right? It's higher. Okay, now second wave. Also, you can argue to say this is higher. So this was actually your second wave, right? Okay, sorry, let me want to get rid of the one there. Okay, so this was your first wave, right? This was your second wave. Okay, this was your entry for XLI, okay? But the thing is, sometimes it also matters where the resistance is. So it's not just your second wave that matters. See, you got to put this together with other things that you've learned. It's not about just the second wave. It's about the fact that look at where the second wave is. It's in between this resistance and this support. So do you enter it here? Probably not, right? So what are you going to do? You have to wait for the next wave to complete. And now it's consolidating above the resistance. You see that? It's using this resistance as a support. So now, actually, on the next wave up is where you can enter this position. Okay? Because now, over here is still risky. It could still come down, right? But if it makes a higher high here and a higher low and confirms this is in an uptrend, because you know you have one wave here, you have two waves here, you have three waves here, and now on the fourth wave, you can enter this position on a dip with XLI, right? Okay, so I have this position, by the way. I have 80 some dollar calls. I bought that for a swing. Okay, cool. Apple calls. Yo, I'm not doing ticker breakdowns today, unfortunately, Kabir. It's just a webinar, so it's not going to be like breakdown day today. I'm sorry. Jumping over dollars to get dimes. Exactly. That's really one of the things. Meditating on more patience from now on, 100% easier. Thank you. This is helpful. Thank you. I see the light. Awesome. Once you draw out these waves, it's much easier, easy to visualize. That's what I was saying. Yup, you the mentee. Thank you. Netflix. Okay, I'm not doing breakdowns today. All your streams are always so helpful. Thanks, T. No problem, Natasha. Welcome back to the stream, by the way. Where can I find info on your beginner's course? Well, go to my Instagram page. I will be putting out more info next week, but you can see the past info from other courses there. So if you want to, have a look at that, you could do that. Like this one's one of them, right? Oops. There are these two infographics that you can go have a look at. All the information for the beginner's course is right here, including the price and all that. Okay. But I will be releasing another, the next wave 9. So we're doing an intermediate course right now. This is this week. We're doing the intermediate course. We just had day 1. It was great. We went through vertical spreads, a bunch of spreads, ideas, and stuff like that. And next week, we'll have the week off. And then on the 26th, we enroll for beginner's course again. And then on 28th to the 2nd is when we're going to do the classes for the beginner course. Okay, so keep that in mind. You are giving gems, fam. Thank you. Appreciate that. Can we look at wave patterns of TSM? Sure. Let's have a look. This will be the last one I'll do, and then I'm going to keep this webinar short so that we don't have too much of clutter. I want people to be able to attend the webinar and learn something. So, okay, so I see what you're saying, but then the thing here is look at this consolidation. It's been in a consolidation for a while, right? So this is not really considered a wave up or wave down situation. Remember, I'm looking at a big time frame here, 1 hour for time frame. So what you want to wait for here is a breakout. You want to wait for a breakout. If you look at it on 4 hour, you can tell. See, you can tell what's going on here. Okay. So what do you want to wait for? You want to wait for a break on either side. Okay, either a break above and then starts to make one wave up, wave one, and then 2 waves, and then this will be your entry. Or wave down, right? Breakout, 1 wave up, 1 wave down, and then entry here for puts, right? So either here or here. And you'll know how to see the waves after they form, okay? You will know. It's gonna be staring at you in your face. You just need to practice a little bit and then you get it, okay? Much easier. Can you share your swing high-low setup on TradingView? Sure. So you just click on this, click on the settings. This one's 12, and then I have a deeper red for the extensions and a lighter red for the high, deeper green for the extension, and a lighter green here. Precision, I keep it at 6, but the precision doesn't really matter, and I change these to circles. That's it. Pretty simple. Are you having an intermediate next month? Yeah, we'll be having an intermediate course next month. It's probably going to be in October. Thank you. No problem, Brown. Is swing high support resistance made by pattern smart? Yes, it is. William, I'm sorry, we're not doing breakdowns today. So I understand that if you buy weekly, Theta will eat away your contract. However, if the contract goes into money, is there still a way to eat away your contract? Yes, it will eat away at your contract, irregardless of whether you are in the money or not. No, pattern smart is a free indicator. All you click on is FX and you type pattern smart. This is a free indicator. Swing high, low, support, and resistance. It's a free indicator. It does support and resistance for you on TradingView. Okay, great. I think that's enough for the webinar today. I hope this sincerely helped you. Now, on Thursday, what we're going to do is I'm going to show you how do you come up with your confirmations in specific patterns, okay? So, for example, let's say you go for Microsoft, right? And then you're like, okay. So now I see the waves, the confirmations. Well, how do I trade the breakout, okay? And I hope by then we'll have a couple of setups that we can play with. So bring some setups here that you think are worthy for a play. and we can put them to the test and see if they, verify our confirmations. Okay, so I'll teach you how I confirm entries. It's not just about wave patterns, right? At that point, we have a bunch of other things with that, right? We have OBV, we have moving averages, we have volume. Okay, so all of these things will be taken into account on Thursday. Today, I was only concentrating on showing you the waves, and the waves are a big part of it. So then you have to use the waves. You have to see, is the wave happening above a support, below a support? What's happening there? Is it above a resistance? Is it below resistance? What's going on with that? So that we'll do all of that on Thursday. Thursday's webinar will be an extension of this webinar. Okay. So if you really like this one, I would really appreciate it if you smash the like button. And yeah, that would be cool. And I'm not sure what just happened to the chat. So I guess I can't read it anymore. Let me see. Oh boy. What is going on? What the heck? Why does YouTube have so many weird buttons? Let's see. Okay. Enable live chat. Weird. Okay, never mind. I don't know what's going on. Okay. No problem. Tesla 1 hour is forming 2 waves after bottoming. Let's have a look. Yeah. So yeah, this is one of them. 1, 2. Well, you need to wait for one more on the 1 hour chart. Okay, so how do you trade this one? Yeah, see, this is the one that I would love to go through on Thursday. But this is a really good example, right? You have your down wave, you have this up wave now. But how do you trade this, right? Because now the stock's opening up here. It's crazy, right? It freaking jumped, I don't know how many freaking dollars up overnight. This is the reason why I hate trading Tesla, because it just moves too fast. And honestly, one day you could be up 1,000, the next day you're down 10,000. And this is the reason why I sometimes don't find this a good risk to reward ratio. Okay, so important thing here to note is, yeah, so you have your first wave, and now you're having your second wave, right? Okay, on the 15-minute chart. Okay, so should you buy it up here? Absolutely not. Why? Because it's going to open up here, right? Chances are what's going to happen, you're going to get an entry when it comes down, and that entry is probably going to bounce at the $400 level. Okay, so wait for the sell-off and then ride the next wave up. Okay, that's what I would say. So don't FOMO into this. Many people FOMO into it and then end up losing a bunch of money, and then it goes back up. Okay, so be careful with that. That's all I'm going to say. Awesome, thank you. What's the definition of a setup? Not sure. Definition of a setup. A definition of a setup is when you have a entry and exit, your risk to reward ratios are good, everything's good. You're matching what your anticipation is. Remember, this is a 90% patience game. Okay, it's 90% patience and 10% execution. If the moment that you become impatient, that's it, you're done. All right. So the 10% is all you need to succeed. And with that, I will leave that to you guys. Be lions, don't be sheep. Stop following the crowd. Wait for the pullbacks. Stop chasing the waves up. That's how you lose money. Let the Robinhood traders do that, not you, okay? Let the Wall Street Bets traders do that, FOMO into things and pay top dollar for contracts with high IVs. You don't do that, okay? Look at where the RSI is. It's super high. It can keep squeezing up, yes, but wait for the pullback, then get in, right? Okay? So I'm gonna leave it right here today, and I hope that you guys had a good day. I'll see you guys on tomorrow for Fundamental Wednesday. We're gonna discuss the intrinsic valuation of Chipotle. So make sure you guys come through for tomorrow's stream as well. Hope you guys have a great day, and I'll see you guys soon. All right, take care. Bye bye.